how would you advise investors to approach their portfolios which have bled through last evening, and some of them may be sharply down even today as well? What is your key advice to them right now?
Key advice, first of all, don't look at yesterday's returns. Look at 1 month, 3 months, 6 month, 1 year, 2 year, 3 year returns. And if you just step back and look at those numbers are still very good. So I think the wealth creation story of the Indian stock markets has not changed. And volatility is a inherent nature of this asset class, whether we like it or not. And that's the only way to create wealth. So we always advise investors to stagger their investments, whether it's through systematic investment plans or systematic transfer plans, and you should stick to that. There is no change in that recommendation.
Mihir, like Shell said, which are going to be the driving horses of this new setup that will be coming in now? And over the long term, where do you see outperformance really coming in from now?
Certainly. So I think the broad thesis of being overweight on physical asset creation will continue because very clearly, if we are to grow at 7 or 8% in terms of GDP growth, there is no way we can do it without physical asset creation. Consumption alone will not drive GDP beyond 5.5%. We need to manufacture and create the infrastructure to manufacture stuff within the country. And that's been the focus of the government. So I think while we may talk about being more overweight or less overweight from time to time tactically, the fact that we will remain overweight on physical asset creation, that continues. That's a long-term thing because there is no way that we can even think of catching up or matching China in terms of growth unless we create those physical assets required. So that's one very clear theme. On a more medium term or a shorter term tactical observation is that financials, the banking and financial space has underperformed for quite some time. And if the economy does grow, and which is what we hope, then I think the banking sector also cannot underperform for too long. If you look at the very long-term returns, 5, 10, 20 years return, the banking index has outperformed the Nifty and the broader indices. So without financial services growth, you cannot have GDP growth, and the sector has underperformed. So to that extent, in the next 1 or 2 years, we might see again the financial services sector also catching up. So physical asset creation and financial services sectors should continue to dominate. However, the relative, I would say, the relative positioning of some of the stocks that we saw rally very hard in the last 12 months may mute down. So to that extent, you might see the underperformance that we saw in FMCG and auto may not be that sharp any longer, and we might see some catch-up.
If you like the video, do like, comment, share and subscribe.